This is Shelley Craft coming to you live on SNN Live. We're at the Sprott Natural Resource Symposium, Vancouver 2014. With me is Mr. Andy Schectman of Miles Franklin, a private company. Welcome to SNN Live.
Thank you, Shelley. It's good to be here. Appreciate it.
Now, Miles Franklin, I know that name, but for those that don't, please tell us about it.
We've been in business since 1989, celebrating our 25th year in business. We've done over $5 billion in sales. Most importantly, we've never had a customer complaint. We've never lost a package. We maintain an A+ rating with the Better Business Bureau. And our reputation is something that we very, very proudly hang our hat upon, and it's really the one thing that we think makes us stick out.
What do you sell?
We sell precious metals. We store precious metals. We sell information. Actually, we give away information free in our daily newsletter, which I happen to think is the finest in the industry. Very comprehensive.
What would you tell me to do today?
I would tell you today to minimize your exposure to the dollar. I think that is your Achilles heel. I would tell you to buy gold and silver on the dips and to accumulate it not as an investment but as immutable wealth, as it has been for 5,000 plus years.
When I walked around and I saw the crowd standing around your table, you had all of these beautiful coins and made out of precious metals. So tell me a little bit more about what that was all about.
We found that there's a primal instinct. People get around gold and silver. It's almost like staring into a flame. It attracts people. They want to see it. They want to touch it. The truth of the matter is that most people have never held a gold or silver coin. Most people, when they think of gold, they think of the necklace around your neck or the watch on your wrist. When we think about gold and silver, it happens to mostly come in coin form, but we think of it as wealth and as money, and not an investment and not something to wear on yourself.
Now, you're in the middle of an equities conference. Mm-hmm. You're in the middle of a commodities world that's all around you, and you stand out from all the others because you have a finished product that you're putting out. Talk about why someone would come to you, buy something that you have on their table. Where does that generate wealth for them?
Well, that's just it. You have it in your hands. You're not reliant upon someone else. Or gold is, I believe, as Doug Casey says, is the only item that is not simultaneously someone else's liability. You have it in your hand, in your possession. You pass it on to your family, on to your children. It's wealth. It's not subjective. It's liquid. And it's, to me, you buy equities to invest, you buy gold and silver to preserve your wealth.
Let me ask you another question. Let's say I'm an investor, and I'm looking at diversifying my portfolio, yes, and I have, let's say, equities, debt, even some other commodities. Why would I buy your product, and I mean this with an informational side to it, because they're coins. So do they have more value than the raw metal?
What they have is liquidity, and what they have is demand, and what they have is no subjectivity. And the coins are not rare, esoteric collector coins. They're just coins issued by sovereign governments. The ones that we choose predominantly would be those issued by the Royal Canadian Mint, those issued by the U.S. Mint, the South African Mint, the Australian, and the Austrian. There are 5 mints: Austria, Australia, South Africa, United States, and Canada. Anything issued from those 5 mints gives you immediate liquidity, sight unseen, without the hassle of assay. So those coins, more than anything, give you subjective, free, sight unseen liquidity anywhere in the world, for that matter.
They're probably marginable.
They are marginable, although that's something that we don't recommend in a very volatile market such as precious metals. To risk your metal to margin, I think, is a big mistake. I would think that you buy gold and silver, you put it away, and you don't margin it. Margining it, again, we go into the investment realm. And obviously you can do that with gold and silver, but for us it falls back to me, it's money in the bank without using a bank.
Okay, now, I'm sorry, I just can't stop asking you questions.
Great.
So my next question is that how much of the portfolio that a person would normally build, what percentage of their portfolio would you recommend should be in what you're selling?
I'm going to be honest. If I told you what I really felt, I'd lose all credibility. But I truly believe that diversification is a term invented out of fiduciary responsibility by financial advisories to protect them from being sued. I think that the key to investing is not to be broadly diversified, as you'll find most of the time asset classes don't move in harmony. Some move up, some move down, some move sideways. You become the best of the worst or the worst of the best. Instead, the key, in my opinion, is to identify the primary trend of the market. And if you were asking me, I would say the primary trend is of a falling dollar. From that standpoint, you take a very large percentage of your assets and broadly diversify within the primary trend. In this example, and what you could find at this show, physical precious metals, mining shares, agricultural ETFs, maybe foreign currencies, maybe some raw land. You're investing broadly inside the primary trend instead of broadly diversifying, which, in my opinion, is a cop-out.
Very insightful. I was going to just say, but isn't diversification qualified as risk averse?
It is qualified as risk averse, but truthfully, you go back through history, you'll find very rarely that most asset classes aren't moving in harmony. I could point to two, talk about, for example, the stock market and the real estate market, but that all had to do with manipulation of interest rates. You had interest rates very low, so people were forced into buying other things. If you would have used the real estate market as an example, you woke up 40 years ago and you said, I want to broadly diversify within the real estate market, you would buy some residential homes, a strip mall, a condo, an apartment building, some raw land, some real estate investment trusts. You would have made a killing because you would have been broadly diversified within the primary trend. But had you decided to buy fixed income and commodities and other currencies and all these other things, you would have ended up spinning your wheels. So to me, you can still be risk adverse, but you have to take a step and trust your intuition, your gut, and your due diligence in identifying what is the primary trend. So there are differences in philosophy, and I know I'm not the poster child for Finance 101, but I do believe if you really want to succeed in investing, the key is identify the primary trend, take a big position in the primary trend, and broadly diversify within it, rather than simply allowing someone to broadly diversify your portfolio into several asset classes that most likely will not be moving in harmony.
Ladies and gentlemen, for more information and to find out more of what this man has to say, I'm going to give you a website, or actually he is. So why don't you give us your website and we'll send some traffic to you.
Wonderful. Our website is milesfranklin.com, M-I-L-E-S, Franklin like Ben.com. We do publish a free daily newsletter, and I honestly do believe it's the finest in the industry. It is a very comprehensive micro and macroeconomic viewpoint of what's happening in the world without shoving product down your throat. We're not trying to sell anything to you. We're trying to educate you and earn your trust. So again, it's milesfranklin.com. Sign up for our free newsletter. Give us a shot. I think you'll be glad you did.
Ladies and gentlemen, Andy Schectman, Miles Franklin. It's a private company. I'm Shelley Kraft. This is SNN Live. We're at the Sprott Natural Resource Symposium, Vancouver, 2014.
Thanks again, Shelley.
What a pleasure.
Likewise. Thank you very much.
You're welcome.